What will be the best performing asset for the remainder of the year? We have a very special guest here to talk about this today and much more. But before we speak to our expert, I want to ask the viewers first, what do you think will be the best performing asset? The S&P 500, the GDX, silver, gold, or Bitcoin? If you're watching this on YouTube, write your responses in the comments down below, and we'll address this when we speak to Florian Grumis, Managing Director of Midas Touch Consulting. I'm going to ask you the exact same question that I just asked the viewers in a few minutes. But first, let's start with the macro update. You and I spoke before a couple of times, and you like to talk about the crack-up boom, which is an economic theory relating to inflation. Tell us how that affects your investment thesis.
Well, first of all, thanks for having me again, David. Much appreciated. Well, the crack-up boom is basically a concept that was phrased by Ludwig von Mises, the leading father of the famous Austrian School of Economics. And he came up with that theory more than 100 years ago, right before the German hyperinflation started. And it basically says that, yeah, the crack-up boom is an economic crisis that involves a recession in the real economy and at the same time a collapse of the monetary system. And that is because there's continual credit expansion by the central banks, and therefore resulting as unsustainable rapid price increases. So that's actually the theory, and that's what we've seen in 1920 to 1923 in Germany. We've seen it in Zimbabwe. We've also seen it in Argentina. And what, if you look around now on the planet, you can see now is every central bank in the world is basically printing like crazy, creating money out of thin air, expanding their balance sheets to somehow keep the economy up and running.
Okay. Well, what's different this time is that we're not seeing hyperinflation like Germany during the time of the Weimar Republic, and we're not seeing Zimbabwe. I want to show the viewers this chart, velocity of M2 money supply. It's at the lowest since 1960, historic levels of low. How does this affect your outlook on inflation? Why do you think money velocity is so low right now?
Well, it is because of the lockdown, right? I mean, most of the businesses have been affected by the Corona lockdown. Many restaurants never opened up again. Many airlines basically have just 25% of their business that they used to have. Many hotels don't see a lot of occupancy anyway. And the business in many parts of the world, in many countries, in many sectors is still slow and only slowly recovering. So that is the main reason why we haven't seen that. But let me just get this clear. I mean, the German hyperinflation didn't start it from the first day. That was a process. And it is not a linear process, but it was slow in the beginning and actually, interestingly enough, there are quite some similarities because after the First World War in Germany, many businesses were basically not functioning at all. Either they were destroyed or they were closed. And in Germany, there was kind of a strike against the reparation payments to France. And at the same time, the central bank started to expand the balance sheet and printed money. So we have a rather similar setup today in the world where due to the lockdown, lots of businesses have been shut down. Many things have been quarantined. So the thing in Germany back then in the Weimar Republic, the real hyperinflation set in 2.5 years after the initial start of this balance sheet expansion. So this is the process and it takes time. And what you can see now already in certain parts of the financial markets, especially precious metals and also the big tech stocks, they went bananas over the last few months. Many of those stocks are up triple-digit numbers. And at the same time, the real economy is still not in a good shape and only very slowly recovering. And if they come up again with lockdowns, who knows how much longer this will extend. But I believe that inflation will come. Actually, inflation comes from a Latin word inflare, which means blowing up the money, the balance sheet. So that's actually the description for it. And what you then see in the grocery store is just the effects of it.
Okay, so the low money velocity is not affecting your outlook on inflation. It's still going to happen, is what you're saying.
Exactly. And I see, for example, if I look at, I just today looked at the agricultural prices for soybeans and corn. You can see they are up 10-15% since end of June. So this will affect grocery prices, and this will affect most of the people.
So the formula for money velocity is the gross domestic product over the money supply. So usually that's correlated with inflation. So which variable do you think will see the biggest move? Do you think GDP will recover faster, or do you think that the money supply will eventually come back down, or do you think that's not going to happen at all?
No, the money supply cannot come down, because if they stop expanding the balance sheet, we will have civil war and crazy things happening immediately. So there's really enough people who lost their job and who are completely depending on state programs. So if they stop printing money and the stock market comes down too, it's over. I mean, we're going to see civil war everywhere in the world. So I don't think that we do this at all.
When you talk about hyperinflation, are you referring to inflation of asset prices or inflation of consumer prices?
I'm talking about inflation of everything in the end of the day, right? Because you can see it, what we've seen now since the financial crisis in 2008, what we've seen is an inflation in asset prices. So real estate went up, most of the stocks went up, collectibles went up, some precious metals obviously went up, Bitcoin went up. And that will continue. And what you really have to understand is, in the end of the day, it's just a question of perception. The more and more people listening to Kitco becoming aware that there is something wrong with this constant expanding of the balance sheet, the more people will wake up and run and buy precious metals. And then that will affect more and more people again. Because at some point, people will realize, hey, I get less with my money. I'm working hard for these 1, 2, 3, 5,000 bucks a month. But whenever I go to the grocery store, I get less. Everything gets more expensive. I don't get a paycheck rise. Something's wrong here, you know. And the normal people, that's the one who are suffering the most. And so I think it's a process in a shift in awareness and the perception of it, and it takes time. And that's what happened in Germany, until finally people really started losing the confidence in the paper money back then. And it is, I think, the same happening nowadays. And you've seen the boom in precious metals happen for a reason over the last 6 months. And this is going to continue overall.
Well, I was reading stories of hyperinflation in Germany. How bad could it get? Could it be really as bad as what happened then? Because, you know, the stories were like, you would walk into a restaurant, you would pay the bill first, because by the end of your meal, the prices of all the menu items would have gone up 2-3 times. So you pay your bill first before you eat. You know, could we see that kind of thing happen? Would it be that bad?
It could very likely happen, not today and not tomorrow, and probably not within the next few weeks or months, but maybe in 2 years.
But the central bank is here to stop this from happening, right? That's their mandate. For most central banks, their mandate is to control inflation and prevent something like this from happening. What are the tools that they will use? What can we see monetary policy changes that will prevent this from happening?
They will try to use capital controls and those kind of things. I don't think that they can prohibit gold again, but they will certainly try things. But at the same time, they need to continue print money, because otherwise the whole system, the whole economy will break down immediately. Look, Madame Lagarde here in the Eurozone, she's printing every week 10 to 30 billion euros every week. And they cannot stop anymore, because if they stop, everything breaks down. And look, just what we've seen a few days ago in the tech stocks. Tesla finally pulling back, and Apple pulling back a little, and everybody's freaking out already. And this is affecting immediately all the other asset classes. And if they stop printing, you're going to see, it's going to be a disaster. So it's impossible. It will not happen.
So we promised the viewers that you would answer the question that I asked them at the beginning of the interview. What do you think will outperform? Let's talk about individual asset classes now. Let's start with risk assets. The S&P 500 index. Data came in this week with disappointing results. Consumer spending was down. A lot of unemployment benefits for Americans were taken away. We've seen the Federal Reserve issue an announcement that was really a non-event. How does all this play out in your thesis about stocks?
I mean, I'm not a big fan of stocks, because I'm a believer in the Dow Jones gold ratio. So I prefer to focus more on gold and precious metals. But generally, I don't have a problem in good stocks. And I also like the big US tech stocks, obviously. I think overall will move up higher in the next few years. And a pullback like we've seen over the last few days, it's probably a buying opportunity already. Even though Tesla seems to be very overvalued from many perspectives. I think stocks like Tesla, Apple, Amazon, they all will march higher over the next few months and years because they print so much.
Okay, so you think it's because of monetary stimulus that's going to be driving stocks higher. It's not because the companies themselves are performing well?
No, it doesn't matter anymore.
Okay, Florian, so we've talked about your crack-up boom theory, and we've talked about your thesis about hyperinflation. How does this affect your gold outlook? You and I spoke a couple months ago, and you blew up the internet with your $9,000 gold price forecast, but that's not until many years later, right? That's not until, that's not happening right away. So there's talk of $3,000 gold, there's talk of $4,000 gold. Is that going to happen right away, you think?
I mean, let me say like this. I was a little bit surprised how strong gold behaved in July and August. I thought the $1,900 would be a little bit more of a resistance, but it is what it is. It was a great rally, and now we are pulling back a little bit, consolidating. I guess latest in the next year we're going to see new all-time highs. If gold takes out 2,075, we probably run quickly towards 2,500. From there, it's not far to 3,000. That's likely possible in the next year, maybe. And then in 2-3 years, yes, $4,000 should be easily possible. And if you consider the exponential developments in a cracker boom and in a hyperinflation, this thing could really move within 3 to 5 years towards 5,000 and maybe even 9,000 or 10,000. And again, the more they print, we could meet and see gold and the Dow Jones at 100,000 at some point.
You've argued that we could see a major correction in gold prices in the short term before we see higher prices. Why haven't we seen that major correction yet?
Well, we have seen a pullback of $200, a little bit more. It went down from 2,075 down to 1,861 in early August. And since then, we're basically in a correction consolidation. It's still not really clear what will come out of this. So far, you can make the argument that gold is consolidating on a high level, looking for a base, and maybe starts moving again. At the same time, I feel, I just can tell you that out of my little 20-year experience in the gold market, usually after such strong rallies, gold needed at least 6 months, maybe 9 to 10 months to basically digest that kind of move. And I wouldn't be surprised to see something similar over the next few months. I personally believe towards the end of the year, maybe in December, we will get a really good opportunity again. I'm a bit cautious also when it comes to the US elections, simply because I believe we will see a lot of volatility and a lot of hiccups and crazy movements. And I prefer to kind of like not be 100% invested in front of such a big event.
Gold or silver, which do you like better? Which do you think will win by the end of the year?
Silver had a beautiful run, and I think it's still ahead of gold this year, and I think that will continue. I don't think that the metals are ready already to move substantially higher again. I think we're going to see, at least until the US election, maybe typically until mid of December, we might see some consolidation and a little bit more of a correction. But silver is certainly outperforming gold this year.